talking about all the fear and uncertainty that has taken place within the economy and how it is that the Federal Reserve is using this uncertainty to their advantage. Now, this is something that I have talked about quite a bit on this channel going back years. In fact, I left a link down in the description to a video I did just about 2 years ago talking about how it is that the Federal Reserve is looking and using the uncertainty within the markets in order to conduct their monetary policy. And I know this is really confusing for a lot of people out there, and I keep coming out here reiterating essentially the same things over and over again, but when I find the evidence of it taking place, I got to come out here and show you guys how it's taken place, how it is that they are using their words to guide the markets, how it is that they were looking for elevated inflation. And when you have fear and uncertainty to the magnitudes that we have within the economy right now, you are going to find the uncertainty elevated and the inflation expectation going up with it. That is what the Federal Reserve was looking for. They have been stating this for a long time. Inside of the consensus statement, the strategy, the long-term strategies of the Federal Reserve, they said it within there that they want monetary policy to have an inflation moderately above 2% for some time. Now, they don't come out and tell the people that. In order to create an environment that has an elevated inflation expectation, you need uncertainty. You need the people to be very fearful of the future, and then they will conduct themselves in a way that will actually create the inflationary scenario. This is what the Federal Reserve is doing right now. Take a look. There's 3 articles that I have left down in the description with 3 different Fed officials using the term uncertainty. It's because they want to communicate that out there. It's being reiterated over and over again. Uncertainty, uncertainty, uncertainty. We don't know what we're doing when it comes to the interest rates going into the future because it's so uncertain. It's so uncertain. That is not the case. They are looking to communicate uncertainty, that they don't know what it is that they are exactly going to do, because that is a fearful expectation coming from the markets who do not understand what it is that the Federal Reserve is attempting to do. And what they are attempting to do is increase the inflation expectation, and it's working. A lot of people seem to think that they are failing when you have inflation reports coming out like they did today saying, oh, inflation's running hotter than they expected, or what, expectations were calling for. That is what the Fed was wanting. They wanted to see articles just like that, and they are getting it. With that elevated inflation expectation, it will raise the neutral interest rate. That is what they are attempting to do with an elevated inflation expectation. By raising the neutral interest rate, the Fed can stand still, not do anything, and have the neutral interest rate get ever closer to the Fed funds position. If the neutral interest rate is the rate that's neither accommodating nor restricting the economy, and it's neutral, and neutral begins to rise, we can find that the economy becomes less restricted due to an elevated inflation expectation raising that neutral interest rate. It's what's occurring right now. I have been repeating this over and over again. Years now, I have put out the same style of communication when it comes to the monetary policy, not deviating one bit from it. Now, my understanding of the communication, what it is that they are using, there's lots of changes that happen within the communication style, but the outcome, the strategy is definitely locked in. And as we go through the tariff and the fear and anxiety from it, and we find that the elevated inflation expectation is now moving into the economy in a dramatic fashion, it's working to the Fed's benefit. Every time they come out with an article saying, oh, we don't know what we're doing, we're not quite sure of what's going on, the people's anxiety gets elevated because of that. They're doing it on purpose. They are doing it to create an elevated inflation expectation, to create the uncertainty by saying it over and over again. Literally 3 different Fed officials within 2 days used the term uncertainty within their communications to the media. This is how they do it, guys. All right, let's start reading through some of these comments and see if we can break this down a little bit. Considering learning how to day trade, but only using a small amount of money, proceeding with caution. If gold goes to 10,000, then a good suit will cost about 10K. The plan is to pay down the debt with hyperinflation. I don't think that'll work. You can day trade and practice simulations. Yeah. Hey, Walrus and Eltron. Hey, it's good to see so many people up in here. Thank you so much for hitting that like button. We got 96 people watching right now with 15 likes. All right. We're going in the right direction. You know, I don't know exactly what it is that's going to happen from the tariffs. Like, I know we're going to experience tariffs. What I am curious about is to what level are there going to be flexibilities, what exemptions, what workarounds, what is it that's going to happen to the countries that are having this tariff inflicted upon them? What is it that they are going to do to try and avoid the tariff? Like, you know, there is going to be some sort of effort, there's going to be some sort of change to the way that people conduct themselves in order to get around the tariffs. That's what I'm looking to see. Everybody has this what if kind of idea on what's going to happen with tariffs. When you think about a 25% inflicted upon the people with no chance of anything else happening, that's guaranteed. But then you get the word flexibility added into it and you wonder what is going to happen, right? You know, and I think about the interest rate adjustments from the Federal Reserve. Like, to me, that is probably the least concerning thing when it comes to the economy and the impact to the economy. Interest rate adjustments on the Fed funds level takes anywhere from 6 months to a year before it really impacts the economy. So even if they were to adjust rates today, I mean, we got 6 months to a year before we would see any kind of impact from that adjustment of rates. However, the communication and the expectation coming from the market are almost instantaneous. So it's important to understand that they are using their communications to guide markets. And that's why you find 3 different articles with the word uncertainty written in it from these Fed officials, because that's what they want to push out there as far as their communication is. They want the people to think that there's uncertainty because it works in their favor. Get in touch with y'all energies. How you carry yourself every day matters. Absolutely. Luke, what is it? Luke Kibbles? All right. We will know by the fall how effed we are, just like 1929. The fall of 1929 was a doozy. Tariffs is going to make foreign car parts ever expensive. Might be a good time to start foreign car breaker yard and sell parts. Hit the like button. Hey, Dishes, great to see you up in here. Everybody go take a chance right now to go and click on Dishes every day. She's in the comment section right now, and go and give her a like and a thumbs up and a subscription to her latest videos. See if we can't get her up to 1,000 subscribers here. She's at 650 or so right now. All right, Justin, which platform you use? Ameritrade? You guys are talking about stock trading. All right. Use prop trading firms. You will learn day trading. God, you guys are all talking about day trading. All right. Already subscribed to Dishes. Well, thank you so much. I really appreciate that. You know, building up a YouTube channel isn't exactly the easiest thing, but it takes dedication. And if you are dedicated to your YouTube channel, you don't have to post every single day, but post consistently. And if you post consistently, anything can be content. And I'm trying to tell people that all the time, that no matter what it is that you want to do your YouTube channel on, don't think that the market is saturated. I'm proof, right? Here I am doing economics from this old suburban truck, talking on a level that I feel is up there with everybody else as far as the macroeconomics community goes. And I didn't feel saturation was my issue. I didn't feel that having the right equipment would be my issue. I didn't feel any issues out there. The only issue that I had, can I make consistent videos all the time? That was my only issue. And if you can overcome that and become a individual who is naturally wanting and consistently puts out videos, you will find an audience and your channel will grow. I guarantee you. I watch it happen with Dishes every day. She puts out videos literally doing the housework and chores and dishes and vacuuming and making the bed, and has 650 subscribers and has videos that get hundreds, if not thousands, of views. You can do it too. Anybody can have a YouTube channel, and I really encourage everybody to go out there and start one. Follow your passion. All right. To the day. You guys keep talking day trading. Day trading. What's up, guys? Hope you all been stacking BTC and XRP. All right, Uneducated Economist. I'm going to email you a draft ebook I built from teachings to get you going, learning Markdown and such. Right on, man. I really appreciate that. Thank you. And guys, some kind of good news. I'm going to be working on it very soon, but for a lot of you new that had known, like, I haven't been updating my website because I lost access to it. I just got it back. So hopefully I could get my website updated and kind of make that more fun to go to and to get information and stuff like that. But yeah, I'm pretty excited. I just got it back. So I'm looking forward to building up the uneducatedeconomist.com site again. It's been gone. I lost access to it quite a while ago too. All right. Sorry for flooding your comment with the trading, Simon. It's my fault. No, it's all right, Wallace. You guys talk about whatever you want. It's just I don't know. I'm not big into day trading, and I'm just like a dollar cost average kind of guy. So I like, pick out my handful of stocks that I like, and I just kind of buy into those things regularly, not really thinking about where the price is or how to make money off of it or anything else like that. I'm just a very passive kind of investor in that fashion because I'm more of a saver, right? I'm like more in the production saving mindset than I am in the capitalist mindset. Even though I'm trying to move more into that capitalist mindset, the property owner capitalist, that's where I really want to head to. But at heart, like in my being, I've always been the producer saver. So it's difficult to try and change that mindset. That's where dollar cost averaging into a stock portfolio is kind of good for me because it gives me that ability to kind of get into investing, but then I'm also kind of saving at the same time when you kind of think about it. Simon prefers to make his money with honest labor. Yeah, I mean, yeah, I kind of do. I mean, I'm not like, just subject to that, but yeah, that's kind of the way I like to go about it, building something, providing something, Okay. Oh, there it is. Thank you, All Nighter, for putting the site up there. Yeah, it's outdated. It's a little lame, I mean, to be honest with you guys, because I really didn't know what I was doing. My friend Chandler was helping me out with it, so we were kind of building it up together, but Chandler's kind of disappeared out of life. Things change, and people kind of come in and out of your life, and although she was a great business partner and had the communication, she went back to school essentially. I live on the West Coast. She moved to the East Coast, went back to school. Life got very complicated, and for both of us in many ways. And the distance and the communication just kind of fell apart. So it's unfortunate. Wonderful person, great business partner, helped me like get the channel really up and moving in the early days. And I can never thank her enough. And if I ever see her again, I would give her a huge hug and thank her for everything that she's ever done. But yeah, she's kind of disappeared out of the world here for me. So, onward. All right, visit now to get a first-hand view of the before and after when the after update happens. Yeah, I'm looking forward to it. Like I said, I don't know much about web design or building or anything like that, but I have employed some help from, some of my friends here that do some of that kind of work, so I can hopefully learn, kind of fast track some knowledge into learning how to use that website or building it up, and yeah, we'll see how things go. All right, can you explain how the market cap of the stock market is multiples more than total value of money in circulation? Okay, so I think the idea behind it is that the value of a stock or anything, right? Bitcoin stocks, it doesn't matter what it is out there. The value of it is what the last person was willing to pay, right? So if the last person is willing to pay $50 for something as opposed to it being worth $20, but yet the hype of people buying into it drives the value of it up ever higher. That's what ends up being the value of it, is what the value of what the last person was willing to pay for, but it doesn't necessarily mean that that's what it's truly worth, or how, if you were to sell it all off at that price, that you would be able to have that much money in existence to actually pay it off. So you have to think it's really just the value of what the last person was willing to pay for it. Wonder if April 2nd will be the new Fool's Day. Yeah, I kind of wonder about that. Charlton, is that the name? Yeah, I kind of wonder about that too. Like, all of a sudden, why, like, April 2nd, like the day after April Fools? Like, haha, gotcha. Yeah, the tariffs are really just kind of, they're all flexible. Yeah, or something. I don't know. The greater fool theory. Well, I mean, I think gold is a greater fool theory because it doesn't have, like, stocks. Is you're investing into a business, the business can grow. Like, gold can't grow any more than what it is. Like, you have an ounce of gold, you put it right here on the dash, and you come back in 100 years, it's still the same ounce of gold. Nothing's changed about it. Right? The only thing that changed is what it is that people are willing to pay for it. But if it was like a business instead, your business can grow, right? It can be a little store, and then pretty soon it can be 50 stores, right? You expand operations, you've got a growing business. Dividend paying stocks, like, you invest into that, then, even if the business doesn't grow, maybe you might get payment for just literally holding the stock, in dividend payments. Rental incomes, things like that. These are investments, right? This is things that pay you back. Like, you're going to have some sort of return on your investment. Greater fool theory is more like, I'm going to buy this with the expectation that I can sell it for a higher price going into the future. Stock speculation can do that, as people are driving the prices up thinking, oh man, like, everybody's getting in, they got to keep buying before it's too late. You get this fear of missing out. Then that, in a sense, can turn into the greater fool theory, or the speculative theory, in which that they're not buying it for the value of the company or that they think it's a good choice, but they're literally buying it thinking that the stock is going to go up and they can sell it later, right? So in that sense, yeah, there is a greater fool theory that can be applied to it. The endless optimistic ambit. Yep. All right. All these people showing this supposed dollar value in their account, but they can't sell and convert it into cash and still have the same value in cash. Yeah, I think everybody at the same time, like if you run for the exit at the same time, then yes, I would agree with that. But like, I just sold a bunch of stock just for, like, to let everybody know that I had mentioned that I was going to be doing this, but I have just recently sold off all my Altria stock, and I sold out of the Vanguard ETF total Russell 1000 growth stock. I sold both of those positions off, not because I wanted to get out of the position because I'm worried about the stock market, but because I'm using the money to actually get out of debt, because I had accumulated some debt from some medical expenses that I put onto the credit card. I thought I would be done with them by now, and because I'm not done with them, I decided that I am going to get out of the stock position and pay off my debt, so I'm done making interest payments, because there's no point in investing if you're making interest payments on a debt, because you have to make a return on your investment that's beyond that of what the interest payments you're making. So it doesn't make any sense to invest if you have debt. You might as well pay off the debt, because there's no better return on your money than to pay off debt, right? So I've removed myself from a position in stocks, and I'm gonna remove the debt out of my life, and hopefully by the middle of next month I will be completely debt free again. With I got to see about Sarah's car, because a lot of you know on that, the transmission went out. We still owe some money on the car, and it's not worth fixing. In my opinion, it's not, because the amount of money that it would take to replace the transmission would not give the value of the car to come back. And since we don't need a ride, we have backups, because when you drive a POS, you got to have a backup, right? Always been my theory, you got to have that third vehicle in case one breaks down. So if I can get out of the credit card debt, get out of her car payment, have that all done, have nothing as far as like a liability other than, my few living expenses and a mortgage payment, that's the position that I'm looking to be in. So anyway, just to kind of give you guys some update on what it is that I'm doing with my with my stocks, that's what I have done. I sold out of Altria and I sold out of the Russell 1000 growth stocks. What time is it? All right, I got a few more minutes here. Did you save enough to pay the taxes on the stock sale? No, I haven't spent the money yet, so actually I haven't even got it. I just cashed out, and so it's being wired over to my bank account. The return, like the capital gains that I had on both those positions, wasn't that great. Um, like it was actually more of a glorified savings account, if you ask me, because really the capital gains on it isn't that much. I will be saving some money out of it for that purpose, but it wasn't really that much of a return that I had. That's one of the reasons why I cashed out of those two positions, is because the other positions are doing much better. Although the Russell 1000 was doing good, it wasn't bad, right? But the Altria, it was doing decent for the dividend payments, but the actual return on it wasn't that great. So anyway, but yes, I did. I'm going to save some of the money to pay the capital gains on that. Yeah. Brody Simon, there was a speech you covered from time ago which I believe commented that uncertainty in the short run inflation expectation stabilizes long run inflation expectations. Do you recall that? Yes, that's actually true. That the uncertainty conducts, I don't know if it was necessarily makes it stabilizes. I think what it was is it gives them the ability to conduct monetary policy better, right? I think that's what it was, that it gave, like, I will find it. It was, I want to say it was in Jefferson's speech. I will go and search it. I don't have my laptop with me, or my tablet, but I will see if I can find that speech, and I will bring that up in the next video. I will see if I can find where that is stated. But it was, I believe what he had said is that the uncertainty is better for monetary policy. So like they can conduct better monetary policy with the uncertainty within the market. And I believe that, like, if you leave the monetary policy open-ended, which is uncertainty, that's another way of saying it, right? Open-ended meaning we don't know what we're going to do here. That's the same thing as saying uncertain. Then you can use your communications going up into that point to say, hey, things are looking good or things are looking bad, to conduct the monetary policy, which is basically the perception of the market, right? So as you're moving closer towards the day of interest rate adjustments, their communication, because it's open-ended, could either deliver something a positive or negative view in order to create that environment that they are looking for. So if there was certainty, they wouldn't be able to use their communication because everybody would be very certain about the outcome, right? And if they were very certain, doesn't matter what their words are, it would be more difficult to get the markets to have this perspective that they are looking for, that the Fed is looking for out of them. If they keep it uncertain, then the market doesn't know what to do. Now they can deliver words through the mainstream media that will then conduct the monetary policy, but it has to remain uncertain for those words to have an impact. Does that make sense? And that's how they were communicating it. Again, this isn't me making this up. This is the Fed. I am, like, paraphrasing some of it and kind of interpreting it and giving my opinion of it, but this is literally what they are saying, All right, right on. That's good, Simon. You're already going to pay off your house. Yeah, I mean, I'm a long ways from paying off my house, but I got a 3 1/8% interest rate on the mortgage, which is really low, right? I mean, I pay a lot in interest every month. Like, the principal payment is, not that great because it's the early stages of the mortgage, but still, it's like, you make a fairly decent, principal payment every single time I make a payment, because I'm at 3 1/8. I just don't see where paying off the house early makes sense, right? Like paying off the credit card debt, paying off the house, paying off the car, getting all that stuff done first, then I'll make extra payments on the house again. I don't think uncertainty is necessarily bearish. It depends on the sector. I agree. I think the uncertainty is neither a positive or a negative. It doesn't have that. The Fed will deliver information, and there will be meaning behind that information that they are trying to deliver. When they do that, then the markets will react to that information. The uncertainty within itself is neither a positive or a negative. Right? I mean, the ego thinks of uncertainty as a negative because the ego wants to be very sure, right? Even if it's a negative, they want to be sure that it's negative, right? So the ego like hates uncertainty, but ultimately, uncertainty is not a bad thing. It's neither here nor there. You know? I agree to uncertainty has an effect on the amount of volatility, I think. Yeah, absolutely it does. Because if people were certain, then they wouldn't be behaving differently. You know, they would be very certain in their outcome. But the uncertainty is what creates the power. Sorry, I misunderstood. I thought you said you paid off all your debts. No, all but the mortgage. I thought I had excluded that one in there. Like everything but the mortgage itself. You know, um, which if that's the case, like really, if I was to focus in on it, I could probably pay the house off fairly early. But again, like I think I could do a better return on investments than the debt interest payment that I would be making. Right? So like like if you have a 10% interest payment, then you have to have an investment that's far beyond 10% to have a return on it, right? Because you're making a 10% interest payment. So if you have a 3 1/8% interest, well, finding something that has like say a 10% return to it, which means you got like more of like a 7% return, it actually kind of makes sense to not pay off the debt but to go and invest, right? But I guess to each your own. You see all this uncertainty on the VIX. It's not the ego. Markets are risk adverse. It's loss aversion. Right. But I mean, I understand that from a stock picking point of view of things, but I believe that the economy is much more than just what happens within the stock market, right? Now, I understand that a lot of people look at the Dow, they look at the stock market, they look at their retirement portfolios and say that's the economy. It's not, right? The behaviors, the actions that we take, the jobs that we go to, the decisions that we make on what cars we buy or like, what credit card debt we take out, that's the economy, right? The stock market is a piece of it, it's a reflection of parts of it, but it's not the economy. What time is it? Alrighty, guys. I'll give it like 5 more minutes here and then I'm going to go. Alright, the greed and fear index correlates to increased volatility if I understand it correctly. Agreed. Keeping your 3% interest rate. Yeah, I mean, at least for now, there's no better security feeling than a paid off house. Yeah, I bet that's the case. Only 29 likes. Hit that like button. Now, I got 56 on mine up here, but definitely go hit that like button. GMA, my cap's allergy. Yeah. Unfortunately, society run by clowns. Yeah, Kirk, I mean, I guess if people think that society is run by a group, I think society has evolved into what it is today, and I think a lot of it has to do with the behaviors of the people when you have massive amounts of new money that comes into the system. People just start behaving in a way that is like, it's funny. One of the definitions of riot is to indulge in to the belligerent indulgement into luxuries, and that's what I think like the United States is belligerent indulgement into luxuries, and the people are literally like that's right. That's why everything is so crazy and chaotic, right? It's because people don't behave in a way that has other people in mind to encourage other people, to uplift other people, to create an environment in which that other people would be able to then rise up and do good in life. That's not in the mindset, right? The mindset is, how do I get mine? How do I get the bigger house? How do I get the car? How do I get mine, right? And that's human nature. I'm not saying like, good or bad or ugly, whatever. It's just human nature within it. But that's the case that we now face today. So clowns to society, it's just like society now. Do you think the transaction speed and fees of Bitcoin will eventually hold it back? Hold it back from what? Like hold it back from like it's serving a purpose now, right? Like I mean the idea I guess the idea behind it is holding it back from becoming a like legitimate currency, something that we use every day. Yeah, totally. That's not going to happen, but that's not because of Bitcoin's speed or anything like that. It has to do with Gresham's law, right? A good currency is not going to be able to compete against a bad currency. It's going to get hoarded away, right? So long as the bad currency is in circulation and people are accepting it, you're going to hoard Bitcoin and use dollars. Bitcoin will never become a legitimate in circulation type of currency because it's not, it's money, right? It can serve as currency, but it's money, right? It's limited. It's like the idea behind Bitcoin being able to serve as a legitimate currency would also then have to take into consideration that gold can then be a currency. And there's simply not enough gold in order to conduct commerce. That's the reason why people were accepting Federal Reserve notes back when the Federal Reserve was established. People were like, hey, we want to be able to do transactions. There's a limited amount of gold out there. This creates business cycles that slows the economy down. Why don't we inject money during good times when the economy is heating up? That way we can keep doing transactions, and the hoarding of gold wouldn't limit the amount of business that could take place out there. And because people were people were willing to do and accept the dollar, the Federal Reserve note, and believe it to be as useful as gold, they were able to do transactions using fiat currency, and eventually the gold was hoarded away. When you put bad currency into circulation, it will drive out the good currency. So how do you introduce Bitcoin into a bad currency like the dollar is already existing right now? You're not going to be able to do it. It'll get hoarded away. Right? So like Bitcoin will never be a viable currency when you have dollars serving its purpose. Like, and dollars aren't supposed to hold value. Bitcoin holds value, even though it's very volatile, right? Dollars aren't supposed to hold value. It's meant to transfer goods and services to other goods and services. When people get upset that it doesn't hold value, they're like, hey, you could have bought something 20 years ago for this much and now it costs this much. You have an expectation that it was supposed to hold value. It wasn't. It doesn't. Well, I mean, you can give it that meaning that it's supposed to, but it doesn't do it. So like there's no point in giving it meaning that it should, because it doesn't do it. But what it does do is it transfers goods and services to other goods and services. Now, if you want the value to be retained, then you have to move the dollars into something that's going to retain value. You put it into gold and Bitcoin, stocks, bonds, some sort of real estate or something like that. You move it out of dollars and into something else that is going to either hold value or go up in value. But to expect that the dollar is going to retain its purchasing power over time is very illogical. It doesn't do it. It just simply doesn't. Right? So there's no point in trying to say, hey, it should, or we should create an environment in which it does, and here's all the reasons why it should happen. That's fine. There's a bunch of what ifs and hypotheticals that you can put into it, but it doesn't matter because it doesn't do it. Right? So once you understand that it's just meant to do the transfer of goods and services to other goods and services, and that's all you look at it to do, then it alleviates all the problems with, oh, it's losing its value, its purchasing power, oh, what do we do going into the future? Like, to me, it was just like, I don't know why I hold on to some dollars for buying opportunities going into the future, but I have no expectation that the dollar is going to retain its purchasing power going into the future. It doesn't do it. It just never has. I mean, it has in the past, but 100 years ago. All right. Guys talking crypto to zero quantum will crash the entire scam. Maybe. My concern over that, very low. I don't have much concern over that. I'm glad that you're in a secure situation. Okay. Not sure how people think BTC is a store of value when it is so volatile. Looking like heading towards stagflation. What do you think the business loans there are like subprime mortgages, trillions, do you think is going to affect us? Yeah, I've done videos talking about like the collateralized loan obligation issue. And in fact, I did a really good one not too long ago. I don't know, maybe 2 years ago or so, that really broke it down, in my opinion, to the real situation that we are facing. And as most people are looking at a collateralized loan obligation as being the major problem, to me, it is an issue, right? But to me, the bigger issue is the shadow banking system, the shadow issuance of insurance policy, the the credit default swaps, the derivative market beyond that, right? So okay, let me see if I can break this down real quickly for you guys. Collateralized loan obligations are basically a jumble of loans. They're a bunch of loans that have been put together into a package, right? Now, these loans that go into this package, they come from businesses that can't even sell junk bonds. Their credit rating is so bad, right? So they have to go directly to a bank to borrow money. When they create that loan, that borrowing that money from that bank, they create this loan. The bank is willing to do it because they're not going to keep that loan. They don't want to loan money to this bad business. They plan on selling that loan off to somebody else. So the bank will issue out the loan to this bad business, create the instrument of debt, then take that instrument of debt, the loan itself, and sell it to a guy who puts it into a security called a collateralized loan obligation. So now here, all these businesses, which are crappy businesses who have taken out all these loans, all this debt, those loans get piled up into a security, and then what they do is they chop it up into what they refer to as tranches. So now all these businesses are going to be making payments on their loans, but not all of them are going to make the payment, right? But most of them are going to be making the payment. The way that these securities are built, these collateralized loan obligations with all these different tranches is it's kind of like stacking up a bunch of champagne glasses into a pyramid, and then you fill the top champagne glass, and then it starts filling up all the rest of the champagne glasses. As the first one overflows, it goes to the next level, to the next level, to the next level. These tranches are very similar. So all these businesses are going to pay their loan, not all of them, most of them, right? All this money comes in, it starts off on the top glass, starts filling that one up first, and then starts filling up all the remainder. The top tranche, that very first glass at the very top, doesn't pay a whole lot out in interest, but it's very secure, right? Because all these businesses, even though they're not great businesses, they're bad business, but not all of them are going to make the payment, but most of them will. Because most of them will, that very top glass is almost guaranteed to get filled every time. That is given a triple A rating, or at least a retirement investment grade rating. So now retirement funds can buy into that upper tranche. These are horrible businesses. These are businesses that are so bad they couldn't even sell junk bonds, but yet retirement funds are buying in to that upper tranche because it's given that investment grade, even though all the material going into this security, all the companies are crappy companies who probably should never be given any money, especially one from a retirement fund, right? Are now getting access to retirement fund money. Okay, so now the problem comes up is if we go into recession, we go into an economic downturn, these companies all of a sudden can't pay their bill, and now retirement funds are exposed to this, right? Because maybe the whole collateralized loan obligation collapses. Like there isn't enough money coming in from these companies to make the payment, and then now these retirement funds are left holding the bag because they bought into that upper tranche and the whole CLO collapses. Okay. Now that collateralized loan fails, there are something out there called credit default swaps. Now, this is where the scariest part comes in, because if everybody thought that the retirement fund losing money was the bad part, get ready, because it's about ready to get even worse. That CLO can have an insurance policy attached to it called a credit default swap. That credit default swap is an insurance policy that an investor can buy, make a premium payment on it, and then if the investment fails, they're made whole again. Here's the thing, those credit default swaps, because it's part of the shadow banking system and not necessarily regulated or even have any kind of oversight or knowledge of how big it's really gotten can be huge, meaning that they have sold way more credit default swaps on a particular CLO than investors are buying into the CLO. Like they're just selling the insurance policies to all these different people out there. That CLO collapses, all these insurance policies can kick in at the same time, and this can take down this is what essentially happened to AIG during the great financial crisis and the mortgage-backed securities. Right? So this is the bigger problem, that all of a sudden we got this shadow banking system that is now causing huge collapse within the shadow banking system. Right? It's like, to that level can be mind-boggling to how big it can be, because there's no oversight, there's no real understanding to what level it has actually gotten to, because again, it's in the shadow banking system. It's not the shady, like people hear shadow banking system, they think shady banking system. No, shadow banking system is basically the private banking money, like private money doing banking operations. Then you got like the Federal Reserve System, you got like the government oversight banking system, the one that we pay attention to, that we look at, the one that the Federal Reserve is in charge of, right? That's like the official financial banking system. The shadow banking system operates in the shadows of that. It's like, a lot of times, I guess a good way to look at it is if you're going to go for a mortgage, you're going to go get a mortgage, you go to a mortgage broker, right? That mortgage broker generally establishes the mortgage outside of the traditional banking system, and then it gets sold into it. So they create a mortgage that they know that they are going to be able to sell eventually into one of the government entities or whatever, into something that is going to be available for a mortgage-backed security. So like if there's people who are, they're not going to create a loan that they can't sell. That's what I guess I'm getting at, right? So the private money will create a loan that they can sell. They will get that mortgage created, and then the mortgage will get sold into the mortgage-backed security operations. Just to kind of simply describe it. People argue with me on that one all the time. Whatever, right? That's that's the way it's going down. So anyway, guys, I got to go back to work. It was fun hanging out with you. We got 240 people watching with 77 likes. Thank you so much for hitting that like button. And thank you for the super chat, for the $4.99 in super chats, because you guys are always so supportive of the Uneducated Economist. Thank you so much for all that support. Thank you for the PayPal donations. Thank you for hitting that like button. Thank you for commenting. Thank you for sharing the video. These are the ways that you can help the Uneducated Economist, supporting the Uneducated Economist. You don't have to become a member of the channel, although if you do become a member of the channel, it's one of the best ways to support the Uneducated Economist. $1 a month, you have access to all these member-only videos that we have done that break down the Federal Reserve speech and explaining the credible threat theory, so that you can then view the credible threat theory in real time as you're watching the news and listening to other people talk out there. You will be able to recognize the monetary policy and how it is that the Federal Reserve is conducting themselves through their words, and how it is that the people interpret those words, get the perspective of it, and then then go into the economy and conduct themselves in a way that is most appropriate to what the Federal Reserve was trying to communicate out there. Did I say all that right? Very complicated stuff, but we break it down here on the Uneducated Economist, unlike anybody else does. Thank you very much for being here. Thank you for hitting that like button. Uneducated Economist, you guys let me know. And go check out All Nighter Hider. Be sure and give All Nighter Hider some love. Subscribe to his channel and watch his videos. He does a great job on his channel as well. Uneducated Economist, you guys let me know.